Hello everyone, my name is Daniel Chee from London School of Business and Finance, Singapore. Our topic for today is second opinion engagement for P7 syllabus. Now, when there's a second opinion, there must be a first opinion. Just like when we see a doctor, the doctor gives us the diagnosis, that will be the first opinion. And if we have doubts, if we don't trust the first doctor's judgment, we may go and see a second doctor. And that's when we seek a second opinion. So you can see second opinion is needed only when we are not too happy with the first opinion. So in the context of accounting and audit, second opinion engagement refers to a situation where the company is not happy with the auditor's judgment. So there's some disagreement between management and the auditors. It can be about accounting treatment. It can be also auditor is requesting to perform certain audit procedures that the client doesn't believe it is necessary. So there are some disagreement between auditor and the management about accounting or audit. Then if the management consider asking another audit firm to give comment about this area of disagreement, this is known as second opinion engagement. So when an audit firm is being asked to provide a second opinion on accounting or audit issues, this will be providing it to a non-audit client. It is someone else audit client. And that can create a threat. Now the threat obviously is self-interest threat. Now there are two reasons for self-interest threat. Number one, there will be the additional fee income. So the fee income for providing the second opinion. But there's also a second source of self-interest threat. If the company is in a disagreement with its existing auditor, there's always a chance that they might want to change the auditor. So if the firm that provides second opinion happen to provide the second opinion that is acceptable, desirable, then the client may want to then switch the auditor and then appoint this firm as the new auditor. So therefore, the potential audit engagement. The potential audit engagement create another source of self-interest threat. And this may affect the firm objectivity. So when the firm provides the second opinion, it may not be objective, it could be biased, so as to give the opinion that the client like in order to get the audit engagement. That's objectivity. Now, it may also affect professional competence and due care, which we're going to discuss next. How does it affect professional competence and due care? Now, the two reasons why the second opinion engagement has a high risk affecting professional competence and due care. The first reason is the audit firm may not have all the relevant information relating to the accounting or audit issue, okay? Because you are not the auditors. So therefore, you start from scratch, from knowing nothing, and within a very short period of time need to give a second opinion. The second reason is the client that is involved in the disagreement is hoping to use the second opinion to influence the current auditor. So the way that the client provide information could also be biased. They might be providing information, feeding the audit firm with information that will influence the second opinion to their favor. And as a result, the combined effect of these two reasons will be in that the firm that provides second opinion may not be using the same set of information that is available to the current auditor. So forming opinion using inadequate, incomplete information, there's a high risk that the second opinion may be wrong, and therefore this affects professional competence and due care. Okay. Second opinion engagement is not prohibited in the Code of Ethics, but the firm, before taking up the second opinion engagement, must consider whether the firm is able to implement enough safeguards to reduce the self-interest threat to a level that can be acceptable. So what are the safeguards the firm must consider implementing? Number one, seek client permission to contact the existing auditor. Now, what's the purpose of this? This is to obtain as much relevant information as possible. So this will help to reduce the information gap between the firm and the existing auditor. So hoping that by doing this, the second opinion will be based on complete information, and therefore the opinion is a good opinion, is an opinion that is based on comprehensive information. So that is the first safeguard. Second safeguard is to describe any limitation in the second opinion. That means in your report on the second opinion, describe the limitation. We are only looking at this area, we are only basing on this sort of information, so that the user of the second opinion know the constraint that the firm has faced in providing the second opinion. And then third is to provide the existing auditor with a copy of the second opinion. Now, the reason for that is the client get your second opinion report, may use that to influence its existing auditor. And the existing auditor would need to know how you might arrive at a different conclusion from them. And if you provide them with the report, they are able to look at your report and understand how you come to the second opinion. And this will help them to understand and help them to be more effectively able to deal with the client pressure. So that is the reason for this third safeguard. So if the client is not willing to allow the firm to communicate with the existing auditor, then the firm should really consider whether should take up this appointment. And realistically, most firms would tend to decline this second opinion engagement. Okay. So this is the a topic on second opinion engagement, different type of service in the P7 syllabus. So thank you for watching this video. I hope this has been helpful for you. We will discuss this further in the class.